Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Glenmark, whether it is attractive at over 500 rupees or one should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Glenmark, a small request to kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and number of podcasts that I put up every 2-3 days time. For detailed market or company talk you want to have, or a number of companies you're holding, you can directly email me and we can work things out. Now about Glenmark, established in 1977, it is engaged in the development of new chemical entities, NCEs, and new biological entities like NBEs, etc. One of the largest API and formulation company. There are 11 manufacturing facilities across 4 countries, and they export globally, including USA, and they've got many US approvals for a number of drugs. Some brands include Alex, Cuff Formula, Candid, Lores, etc., that they are selling in the Indian and global markets. If you look at the financials of Glenmark, then sales did not go up that much in Q1, although other companies have produced better numbers in the pharmaceutical space. So sales were flat at 1%, but look at the profits. So the profits went up by 142% owing to higher margins, higher, you can say, prices of the products that they are selling, and this is during the pandemic that we are talking about. Interest burden has reduced, so the debt is reducing quite well, and that augurs well for such a company, because normally most of the pharmaceutical companies have low debt. Decent promoter and institutional holding, I won't say very high promoter or institutional holding, I would say decent promoter and institutional holding. Return on equity of 5.7%, net profit margin of 8.2%, which is reasonable but could have been better if one could consider many large pharma companies or other competitors. They are having better ROEs compared to Glenmark. If we talk about the performance of the stock and the company, stock fell relentlessly since April 2015. So we saw the pharma downside from 2015 up till April 2020 or March 2020, and there was total capitulation, and then the stock prices went up. In those 5 years, we have seen real damage to all the pharmaceutical stocks, lost around 66% of its value till end of 2019, and from those highs of 2015 the market cap has been reduced to less than 1 lakh crore at one point of time, and which was quite surprising for a company that used to trade at 1.5-2 lakh crore market cap or so. Major fall took place in March that we saw, and a sharp recovery in April, and that has been continuing till now. So what has happened is that right now the stock is trading at 500, 520, and has recovered very well, probably nearly 100% from those March lows. Now, what have been the reasons for the up move? And one needs to understand that in order to understand whether this up move will continue or not. Surged in June on news of launching Favipiravir, and this is a drug that is used in that had to be used in treating patients, but then uh, drug is going on in some cases. In some cases it is not, in some cases it is on trial, and like that. So just because of that news, it surged in trade from 350 380 levels, and went up sharply for 2 3 days and then came back down. Second thing was that the pharma theme was in radar, so the stock fell to 250 or so, but then recovered to 350 380 purely on the basis of the fact that a lot of pharma companies, and all across the board pharma was going up, so the sectoral PE was getting expanded, and that is what happened with most of the pharmaceutical companies. So it was small cap, mid cap, large cap, everything went up. So Glenmark also went up, and after that we saw a situation in which we had a lot of, you can say, news about the drug, etc., and that also led to the fact that the stock would surge. Uh, it had very good sales numbers in June, and uh, people thought that the sales would drop, but sales remained robust and the profit numbers were good, and that also helped the stock to go up higher. US FDA becoming more approval friendly, and that has happened over the last 6 months or so, 1 year or so, just before the pandemic hit India. When it was in the world from November, December onwards, US FDA became more forthcoming towards Indian companies for in order to have more of the different drugs coming into the market, in order for them to have different medicines coming into the market easily. US FDA relaxed their norm per se, not officially, but unofficially it looked like that the norms were being relaxed. So they became more approval friendly, it looked like, and world is in need of solutions. So everyone who is even close to having a medicine for this illness is getting approvals. They are being given approvals very quickly to get the trial going and have the medicine on table. And same went with Glenmark and with other, you can say, pharmaceutical companies here in India, and that has led to many approvals of other drugs as well, for companies in Biocon, Syngene, and Glenmark, whether it is Aurobindo, etc., Dr. Reddy's, Divi's. So every company here in India, every large company or renowned company in the pharmaceutical space is getting those approvals. Uh, and this is a phase in which pharmaceuticals should do well over the next couple of years, and this is the point I want you to ponder on a little bit, because I believe that next couple of years could be very good for pharmaceuticals as long as this thing go away. And once it is quite evident that the thing has gone away and people can live a normal life, we will see a decent amount of deep correction in the space. So probably 2 years time frame is pretty good for the stock and this sector as a whole to hold on to. I think 1.5 to 2 years it could do well till 2022, but after that I feel that again consumption will rule the roost. So pharma and IT may be the theme for the next 18 months to 2 years, and IT is now coming back into shape. Probably one next 1 year for IT could be very big, but then again they will be selling at large once valuations get stretched, because IT has also run up a lot, as has many pharmaceutical companies. If you look at the technicals of the stock, then the 200 DMA is around 365 and the stock has gone past 500. So currently the short term support is around 460, which is the 50 DMA, and the big up move is expected above 610. Once it crosses 610, 615, then we could see even 980 levels on the stock. So you can keep a stop loss around 450, 460 if you have a short term view. You can keep a stop loss around 350, 360 if you have a fairly long term view. Keep a stop loss of 20-25%. You could, if things really go right, you could see 1,000 in the next couple of years or so. It could be that it has run up again, so may go up a bit but then consolidate. So there would be opportunities to get into the stock, but uh, have a not a very long term view on the stock. So what needs to be done? Can buy for long term, but not hugely. So for the next 2 years, it could be a very good pick. Most of the pharma companies, if you have bought, then at lower levels, then you can hold for the next 18 months. If you have not bought, then wait for major declines. Again, in case of Glenmark, a 10% fall is more appropriate to get into the stock for a 2 year period. Pharma may perform well till 2022, so keep that in mind and have less than 10% in your portfolio, such stocks. So this was my video on Glenmark. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.